Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com, a leading tax filing online portal. First, let us talk about the US market. US Fed has increased the interest rate by 75 basis point, and that was expected, and I told you there is a 90% chance that it will hike by 75 basis points. But the US markets were a little bit volatile, we can say, because the market has already fallen for 5 consecutive days. And yesterday evening itself, in all the media, including CNBC TV 18, so they started telling, 75 basis point will be seen as a positive for the market. And, there are always two sides of a coin. There are two ways of looking at things. And now market is happy that Fed is taking a drastic action to reduce the inflation, and market is seeing it as a positive thing. Even ahead of the announcement, the US VIX has fallen nearly 7-8%. That was very, very surprising. And as the announcement came around 11:30 p.m., the Dow fell nearly 400 points. And again, after 12 midnight, when Fed chairman started speaking, they usually talk dovish only, so they never talk hawkish. And the Dow again shot up another 400 points. So although it was a huge intraday swing, on a close-to-close basis, Dow was up more than 350 points, and now future is another 200 point higher. So the severe selling of last 1 week, seems to have come to an end in US. But what about India? So at the end of the day, US VIX has fallen nearly 10%, but our VIX in the last half an hour shot up by 2% yesterday. But again, that was ahead of the event. So today, after the event, India VIX is also likely to crash. So I'm expecting at least 5 to 10% crash in India VIX. SGX Nifty is indicating opening higher than yesterday's high. For the last few weeks, so what has been happening, every day Nifty was opening, SGX Nifty indicating opening below previous day's low. After a very, very long time, today is the first day, and I'm seeing SGX Nifty indicating opening higher than yesterday's high. So this is seen as a positive thing, and at least we can say the short term bottom is made, and 15,671 was the swing low in the month of March. That was broken by 12-13 points this month. And now if the market moves higher from here, significantly higher from here, we can say even in the longer term perspective, markets have made a double bottom. But that we cannot say in hurry, because just 100 point gap up is not a big deal, and any time after 2 p.m. FIAs can come and sell and can bring that market down. So yesterday, left, right and center, people have bought put option, want to try their luck, and those option buyers, whether they are the put option buyers or call option buyers, and they are likely to lose heavily, because like this, 50 to 100 point gap up or gap down, option buyers will lose. Say for example, I bought 15,600 put option. Yesterday I bought around 40-45, and then it closed around nearly 80 rupees. I should have squared it off. But the thing is, I bought for the hedging, so there is no point in squaring up. So today I'll be losing. But anyway, for me, it's not a big issue, because I bought put option, 15,600 put option, and financed it by selling 15,900 call option. So my worry will come only if the market move significantly higher from here. 50-100 point move, so I'm not going to make any loss. And moreover, in the last 1 minute, since I saw 15,200 put option spiking from 4 rupees to 11 rupees, and I sold 15,200 put option for around 10 rupees. So all in all, I will be able to exit with no loss, no profit. Another one yesterday, if you can remember, I suggested put back spread. So I bought 15,800 put option and I collected about 140 rupees premium and used that 140 rupees premium to buy 15,600 put option, 3 times the quantity. So if the market closes above 15,800, I will make no loss, no profit. But in case market has fallen drastically, my 3 put options would have given much higher profit for me. So this put back spread, call back spread is what people do usually on a very, very high volatile market. But the Fed event has become almost a non-event. Even on a normal market conditions also, Nifty can gap up 100 point or 100 point down. So, today, as I said, we can expect India VIX to fall and market likely to move higher. And I will become slightly bullish only if the Nifty takes out at least 16,000 on the higher side and it has to take out 16,200. Because from 16,200 only, in just one day, a huge gap down, market fell. So that has to be, that was a gap, a huge gap. So that gap has to be filled. So until then, it is really time to be cautious. As I told you, in longer term perspective, we have 2 big problems. Number 1 problem that Indian markets for the past many decades always used to trade at a higher premium compared to other emerging markets, about 60 to 80% premium to other emerging markets. When the times are bad, when the interest rates are higher, the US people are leaving India, FIs continue to sell relentlessly like this, so there is no way market will go back. So that how much of that premium will be wiped out, that's only for the market to decide. So that is one thing. Second thing, FII selling. No matter what happens, every day they are selling 3,000 crore, 4,000 crore, 2,000 crore. So normally in 1 month, normally there is only 20 trading sessions, but for the last 6 months, every month they've been selling 40,000 crores. So which means that they are selling on an average of 2,000 crore every day. And just imagine 2,000 crore every day and non-stop for the last 6 months. So in between market may go up, relief rally may come, and ultimately market may come down. But only thing that we are hoping, market goes up or down, it goes up or down gradually so that, you know, intraday traders or short-term traders, they can make some money. And otherwise this 500 point gap down, 400 point gap up, you know, that is what is going to be a big problem. Just imagine, I bought 15,600 put option and financed it by selling 15,900 call option. Assume that today 400, 500 point gap up, I would have made huge losses. Of course, 400, 500 point gap down, I would have made huge profit. That's a different story. But the thing is, we have to look at the risk. So anyway, like anticipating such a big possibility, I just bought 16,200 call option for hedging, but you still will lose 300 rupees. So that is the market. So markets may be going for a slow grinding and markets not looking bullish at this point of time. And our first resistance will be around 16,200 to 16,300 and the second resistance is around 16,800. So I don't think that these 2 resistance will be taken out in the short term at least. So I'm selling call options 17,000 and above and for the July series. So because June series 17,000 call premium is too little. So anyway, we can expect some collapse in India VIX. So the option sellers can be very happy, but don't go by the enthusiasm by the US market and look at the US market Indian ADR shares. They are not significantly higher. In fact, Wipro was down and Infosys was slightly only higher. And only ICICI Bank was slightly higher by more than 1%. The rest all is less than 1%. So we will be dancing to the tunes of US market. But however, at one point of time before the end of this month expiry, there will be some short covering because FIAs are still holding 89% short position in index futures. So today stock specific, the people started talking about the Reliance Industries once again, the 5G auction and many other news flow. So let us hope Reliance support the market today at a higher level. And of course, banks also, particularly private sector banks are down significantly, and particularly HDFC and HDFC Bank. So we need to keep watching this HDFC Twins and Reliance, and if the market gap up open, if it sustains there, then it is good. But we cannot say anything after 2 p.m. what is going to happen. So that will be interesting to see today, especially today is an expiry day. There will be a lot of volatility here. So hope you enjoyed watching this video. Thank you for watching.